Okay, so it's pretty late, but I didn't take a trade today. And Obviously because I thought price action wasn't that favorable, so I didn't trade. Um, and yeah, this video is just going to be about talking about when to know to not take a trade and when to know like when you should be off of the market and not be on trading and looking for setups. And so yeah, that's basically um what this video is going to be about. So today I did not take a trade. And today's news, we'll just start off with the news. Today there was non NFE, so non farm employment red folder news, and the other red folder news was President Trump speaks, which he's probably going to announce tariffs or something stupid, and it's going to make the market go down. So well, I don't know if it's stupid or not, but I know it's not good right now in the current situation. But anyways, so we have that red folder happening. And the red folder when Trump speaks is at 4, and the NFE is at 8:15. So we've got news before market open and news at 4 at the end of market open. Both are red folder. So all this price action in between the two, what can we expect that to be? Maybe a little more choppy, maybe a little more volatile, less entry models, less setups, and all that stuff, right? Low quality setups. I mean, you could still trade it, but the setups are low quality, high risk, not too great of a reward, I don't think, in my personal opinion. But it all just depends on how you trade it. So yeah, let me just start off by doing this. So I'll get rid of all this right here. Okay, so this was the market open candle, right? It was right here, the 9 o'clock candle. Okay, so just pretend all this isn't here, right? You block all this out. This is what we saw going into the market. You can't really see that. This is what we saw going into the market was right here. And keep in mind, each one of these candles, right? So this candle right here, that is formed in an hour time period, right? So it takes 1 full hour, right? It takes a full hour for this to happen, okay? So this candle might push up, right? Then push down, then push back up, and that was the closing price right here. I don't know why it's not doing that. And this was the opening price right here, okay? So that's a whole hour time frame. Okay, this is 1 hour, 2 hours, 2 hours, 3 hours, 4, 5, 6, 7, 8, 9, 10. Okay, so 10 hours of just straight market going down. You can see we went from up here, right up here, and all this. Don't forget about this. Right here went from $20,500 a share all the way down to whatever this low was, like $19,000 a share. So basically $1,000, $1,500 down, which is like a 2.5% move on the Nasdaq, which is a lot of movement. Okay, for especially for this index. So with that being said, right, we have this giant move down. I remember talking to my cousin on FaceTime. I was like, today is going to be weird to trade because we had this move down. Like it's just going to be a different day to trade. And on top of that, we had news, right? So then this is the part where I decided I wasn't going to trade. Let me see here. This is market open. All right, so then market opens right here. This is the candle of market open. I won't even mark it out, but right here, this candle, this green one, that's the candle of market open, okay? So as you can see, right, or wait, let me go back. Okay, so I'm still on the hourly, right? And I marked out all of these areas where price could have a reaction, these imbalances, right? If we expect price to go here, maybe up here, right? This big one right here. This, let me go look at the 4 hour. Yeah, the 4 hour, we'll just move that down. This 4 hour. So basically this 4 hour right here, I mean, there was lots of areas where you could have like had a good trade idea to actually end up taking shorts, right? That was my original plan, was to take shorts, but going into market open, oops. Okay, so going into market open, let me get rid of this now. 9:30. 30. That's not the right one. right here. Well, no, that's not even the right one. I need to drag these candles over more. One sec. Okay, wait, I messed up. Okay, so this was market open today. Is this Tuesday? What's this? Tuesday. Wednesday. Here we go. Okay, I was doing the wrong market open. All right, so Wednesday. This was today. Okay, because I remember having all these fair value gaps. Right here we get this one. We have this one. We also have this one right here. We also have 30 minutes in here. And all that. So we're going to the 5-minute to just kind of see what price wants to do, right? And my idea was if price comes into any of these areas of interest on the 5-minute, right, we could have a maybe a leg in, then down, or maybe come in here, down, right? That was my original trade idea. But market opens right here. This is the exact market open candle, this green one, opens and completely, right, goes up, right? So I'm waiting for it to fill this. Breaks here. The next candle, completely up, zero reaction. Okay, you can even go to the 1-minute, and even the 1-minute, will show you that, right? This is so hard to trade. Okay, this right here, just this alone, this move, right? All those green candles, there's no pullback for an entry to go long. There's no nothing. Okay. So with that right away, I was already thinking to myself, I was like, this probably isn't the best day to trade, especially because we have red folder news in the beginning and at the end of market. So I just didn't. I didn't trade, and I'm not upset about it. Like I used to care if I didn't trade, and I just don't care anymore if I trade or not, and I'm not upset that I didn't trade because just looking at some of how this would have played out, like it would have played out in my favor, but it's just a lot of risk on the table. The one trade that I did find that would have been favorable to me is this 15-minute fair value gap gets made, price comes down into it. I would be really surprised if I didn't take longs out of that up to some previous day high, like all the way over here or something like that. But I didn't because it was just I feel like it was a risky setup, a risky trade, a risky day, right? And I don't want to be doing that. I don't want to be taking, dumb losses that'll just take all of my profits away and my progress. So that's another thing that really held me back from coming to where I'm at now is I used to take dumb, stupid trades just right away to try and make money, and it would just eat away at my profits, right? I'd hit one really good trade in the week, make a bunch of money, and then the next 4 days of the week, I would take stupid trades, and all of it would just eat back at my profits, and at the end of Friday, I would end up break even, right? And I did that for like a couple months. It sucked. And so I completely stopped just even trying to trade days like this that I just don't feel comfortable trading. Obviously, some people are comfortable with it. If you're comfortable with trading these days and you have a system how and to do it, then obviously you should do that. But for me, I just didn't. So yeah. And as you can see also, right, Trump speaks at 4, and what happened? 4 o'clock we get, or right here, like 4 o'clock around, we get this move up, and then look at that. Just huge down candles, probably some tariffs or something. And that's just how it is, right? Not every day is predictable. I personally don't think this price action was very predictable. I wanted to see a pullback further, even like on the 5-minute, maybe here, pull back like here, chop, maybe boom, break this, pull back up, enter off that break, and that stuff. That's what I would have ideally wanted to see, but I just don't think on days where price action is bad and is telling you to not trade, you shouldn't trade. If you're ever looking at the chart and you're like thinking to yourself like, wow, I have no idea any sense of direction of where price wants to go, right? The second that idea gets into your head, Not because it's an idea that is limiting, but if you genuinely don't know where price wants to go and you genuinely are lost, then that probably means, if you have good technical analysis, it probably means that you shouldn't be trading today because the markets are going to be choppy and just mess with you, right? And I'm sure I know of retail traders that got messed up in this move right here, right? Taking shorts or whatever. So yeah, I just don't want to have that type of risk on the table when I know the trade isn't what I'm looking for, right? If the trade is what you're looking for, then that's great, right? Obviously, take the trade. But yeah, that's just basically what I want to talk about today is like to know when to just relax and not pull the trigger, right? You need to know when to pull the trigger. You need to always know, but you also need to always know when to take your hand off the trigger, right? Because why enter a trade on a day where there's not going to be crazy reward, in my opinion. The setup isn't A plus, also my opinion, and it's choppy, right? There's news and anything could happen on today, a day like this where price rips all the way up, right? Obviously, yeah, you could have taken this break, retest, and longs, but I just felt like it wasn't that favorable, I guess. Like this morning, it just kind of look at the 5 minute. I mean, realistically, look at this. We get the move up, no pullback, okay? So you're not entering on that. If you caught that, it's gambling, I'm pretty sure, unless you caught the break. Because entering with no pullback is a little crazy. Then all you do is get this 5 minute accordion pattern before we just accordion pattern on the way up, right? And then right here, this is clean price action right here. This is also clean price action, right? The clear motive direction of where the market wants to go. But I just think that you need to know when to just close the computer and not trade, because if you don't close the computer and you trade on days that aren't worth it, you're going to end up losing a lot of money and it's going to eat away at your profits. And ultimately, that is what's going to cause you to be unprofitable at the end of the day if you continue to do that, right? Bad habits. If you build these bad habits, then that's just going to happen. Like I'm obviously, I think this move to the upside, like, yeah, this is possible to catch right here, this whole upside move. But at the same time, just by seeing this at the start of the morning, right, it's not favorable of what I want to see and what I want to happen. So yeah, I didn't do that. I also didn't trade the PM session because I knew it was going to be a little more choppy, and just like I thought it was choppy. Look at that, right? What is that price action right here? Come on, bro. Okay, so anyways, then right when Trump spoke, boom, obviously, right. So yeah, just gotta know when to get off and when it's okay to just not be on the charts, because I think that's what a lot of people struggle with is they have this idea in their head that in order to be profitable, they need to always be on the charts, they need to always be doing work, and they need to just always be doing something with trading. When the reality is that the reason why trading is so hard is because you have to let go of all those thoughts and just make trading more of like a not careless, but just you really need to have a kind of like carefree state of mind doing it. It's like to be good at trading, you need to be able to let go of wanting to work all the time and do that, because realistically, all trading is waiting for setups like 90% of the time. The other 10% of the time, you're actually taking the trade. So 90% of the time you're waiting, which means why would you need to be on the charts all the time? Why would you need to be constantly working for something that it's just not how it works? And that's the psychology aspect of trading, is that realistically, to get better at trading, you kind of need to just know that, like, it's okay, like you lose, so what? You just have to, yeah, just to be good at trading and get better at trading and improve your trading every day. You just have to go in and out of trades with a carefree state in mind. Every time you open up the market, just you should be opening the market up expecting not to trade, and have price like give you a reason to trade, right? If there's a reason to trade, these candlesticks will show you. I can guarantee that they will show you which way to trade, and you will take the trade. If there's no reason to trade, then they won't, right? And you can't force something that's not there. You can't force the market to give you something that you want, because the market doesn't move for you, it moves for everyone else, right? Like, yeah, I can't stress that enough, is the market's not going to move for what you want. The market's going to move however it moves, and you're going to take advantage of that, but it's not specifically going to do exactly what you want every time. That's just not possible, right? So yeah, if you want something to happen and it doesn't happen and you're super upset about it, then you need to figure out something, a vice or something to do where it won't make you upset, right? Where something can happen in the markets and you can observe it without having emotions. And so yeah, that's basically all the video is today, is just know when to trade and when to not trade. And I think today, like for some people, yes, some people made money. I think a lot more. I think a lot more retail traders lost money today than won, just because of this morning price action, and this obviously. Um, and yeah, I just think you need to be aware of the days that you're not supposed to be on the markets, or you don't feel good, right? A lot of times your gut instinct is right? You don't feel good about something, but you do it anyways. And what happens? You lose the money. Versus you don't feel good and you're up on the week. Oh, well, it's one day. I won't trade. And then boom, you still have your profits, right? So just don't take unnecessary dumb losses, because it just ruins your profits. It makes the process 10 times slower, 10 times harder, right? Just makes everything all compact and hard to understand when you're taking these dumb losses. It also makes you feel crappy because you think your psychology is bad, your trading, your technical analysis is bad, when that's not it. Really, it's price action. And you just need to realize that. A lot of the times also though, traders will put the blame on the markets instead of realizing that it's actually their fault. Right? So like they blame, yeah, price action was bad when they were super emotional over traded. But for instance where there is bad price action on a day like this, like you need to realize and understand that you not trading is actually going to help you in the long run. Like it may seem like taking a break or like not putting in the work, but that's realistically that's just not true. You not trading is building the disciplined habits that all good traders need, and that's what's going to that's what's going to keep you profitable, is building the disciplined habits. So yeah, that's basically all I have for this video, is just know when to trade and when to not trade, and know that like if you're not feeling good about a setup, just don't take it, because you're probably right? Like if you think in your head before a trade, you're like, man, I really don't know where market wants to go. There's not a clear direction. Like this is confusing. The second that thought comes up, just get off the charts, right? It doesn't make sense to stay and force the charts to do something, because that's not going to happen. So yeah, that's basically the whole video today. I know it was a little bit of a yap, but hopefully you guys learned something, and I'll see you later. Oh, that didn't work. I'll see you later.